Before the opening bell, U.S. indices closing higher on Thursday before the Brexit announcement, led by shares in banks, semiconductors and semiconductor equipment, as well as diversified financial sectors. On the economic docket, the Chicago Fed National Activity Index falling to negative 0.51 in May from 0.05 the previous month. Also, initial jobless claims decreasing to 259,000 in the week ended June 18th. Continuing claims ended June 11th down 2.14 million, and U.S. manufacturing market PMI rising in a preliminary estimate to 51.4. That's not all. New home sales down to 551,000 in May, and the leading index falling by 0.2% in May. Advancers, they were well ahead of decliners. 92% of SP 500 constituents trading higher yesterday. Now, after the market closed, no major aftermarket news appeared except for the Brexit. Brexit pushed global indices lower, Asian markets falling sharply today. The Nikkei down 7.92%, the Hang Seng down 2.92%, China's CSI 300 down 1.29%, and South Korea's Kospi down 3.09%. European markets collapsing, and U.S. futures calling for a lower open. Now, there is no major earnings expected out of the United States today. While on the economic docket, 8:30 in the morning, durable goods orders for the month of May, and 10 o'clock in the morning sees the June final University of Michigan expectations read. Now, the SP 500 does see the downside prevail. Technically, the relative strength index below its neutrality area at 50. So short positions below 2,053 are favored, with targets at 1973 and 1950 in extension. Moving on, the Nasdaq sees the downside prevail, preferring short positions below 43.53, and the Dow Jones seeing the downside prevail, preferring short positions below 17,620.